What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this afternoon. So what we're going to be going over in this video is yet another indicator that I have been looking at over the past couple of weeks and months that is just another sign that we are headed towards a major market disruptive event. Now, that could be a sell-off, crash, correction, whatever you want to call it, but there are a lot of signs pointing to this coming in the near future. We're going to go over this new indicator that I want to bring up to you guys and some of the additional ones that we have been going over on this channel, so we are all caught up to date on everything that is going on. Now, first, I know a lot of people get very worried about this potential market big crash coming in the near future and how that relates to AMC and GameStop. Now, we're going to go over that in full in this video, but also I believe that that is actually a bullish situation for the short squeeze. So in addition to all of that, I want everybody to pretty much stay calm. As everybody knows, TMI always likes to say, stay cool, calm, and collected. After a massive red week like this, there are a couple of things that we need to think about. One, have the shorts covered? No, the shorts have not covered in a substantial way as of yet. So the only thing that has really changed in this AMC short squeeze situation is the price that we are seeing on the screen. Now, I know a lot of people have gotten in at these higher levels. You have an unrealized loss on your position and you are getting worried. What I would suggest to those individuals is just do the research on how deep this situation actually goes. None of us on YouTube are financial advisors. We cannot give financial advice, but what I would suggest is just do your own research into this situation. So before we get into all of this information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. So we ended the week at $34.06. We started the week in the $40 range and we closed in the mid $30 range. That is a big loss. But when we come over to Ortex right here, we can see that the utilization has been continuously climbing. We are currently at 91.31%, meaning that 91.31% of all of the shares that institutions are willing to lend are currently out on loan. We are seeing the percentage of the free flow on loan right now getting very close to 20%, but the estimated short interest as a percentage of the free flow is still at around this 15.75% mark. Now, I always say in my videos that Ortex is not a fully reliable source. They do not have the full market picture, and a lot of this data can be manipulated. So what I like to do is just look at the trends in this data to give you guys a better picture of what is going on. I like to look at the utilization, the shares on loan, the percentage of the free flow on loan, and I always take with a grain of salt the estimated short interest as a percentage of the free flow. But what this does tell us is that the shorts have not covered yet, and this is only the reported data. We are not seeing any of the naked or synthetic shorts being reflected on all of this data. So now let's get into this economic indicator that could suggest that we are headed for a significant downturn in our market. So when we come over to this article right here, inflation climbs higher than expected in June as price index rises 5.4%. Now, when you think of inflation, a lot of people think a little bit of inflation is always a good thing. We can see boosts in prices such as stock value, real estate value, and all of these other different investments. The problem comes when inflation gets too high and it could start to run out of control. So it is going to get to a certain point where the Fed could potentially have no choice but to raise interest rates. At the current time, the Fed funds rate is incredibly low and they are going to have to increase that eventually. Right now, they're expecting between 2022 and 2023 for this to happen. But if we do see these inflation numbers start to spike, we are already seeing this right here. It's coming in higher than expected. They could always come out and raise rates early. Now, what does this do to stocks? When we come over here, we can see that rising or falling interest rates also affect consumer and business psychology. When interest rates are rising, both businesses and consumers will cut back on spending. This will cause earnings to fall and stock prices to drop. So think about that very carefully. When interest rates start to rise, and most likely that is going to be due to inflation running higher than expected, stock prices will drop. Now, what also happens with bonds? Interest rates also affect bonds. There's an inverse relationship between bond prices and interest rates, meaning that as interest rates rise, bond prices fall. fall. And as interest rates fall, bond prices rise. Now, when we come over to the 10-year Treasury, we can see that we have been on a significant downtrend in this 10-year Treasury rate over the last 3 months. Now, what this means is that people are pulling their money out of equities and putting them into bonds for a safer investment. So we have inflation running higher than expected, and we have people taking their money out of stocks and putting them into bonds. When you combine this with Goldman Sachs selling off about 25% of all of their equity investments in the second quarter of 2021, they obviously know something is coming. Now, how does this relate to AMC? So we have to think about the over leveraging in the United States right now. The margin debt is at about almost $900 billion, which is going to be the all-time high that it has ever been at. What this signifies is massive amounts of over leveraging. The Fed has even come out and confirmed this by saying that the hedge funds leverage levels are well higher than the historical averages. Now, when we think about a portfolio that the hedge funds are holding, what happens in a market correction is that their portfolio values will drop significantly, and that could lead to a massive wave of margin calls, which is going to drain a lot of liquidity from these hedge funds. And liquidity is a very important thing to note, because if the hedge funds can keep pushing off and fulfilling these margin calls with the ways that they are able to generate liquidity, they can keep kicking the can down the road. Now, what we are really focused on is forced liquidations. Now, if the market crashes enough, according to all of these different indicators, it does look like we are headed towards one of these corrections in the near future. A lot of the positions on the over-leveraged funds balance sheet are going to be forcefully liquidated. Now, what does this mean for AMC? If one of these funds has a big short on the ticker AMC, we are going to see those shorts get forced to cover. It is called a forced buy-in, where their prime broker is going to close them out. Now, we are also seeing all of this confirmed that there is too much money out there, inflation is getting higher than expected, and the Fed has essentially overcooked our markets. Now, the way that we see that is through these reverse repos. So what happens in a reverse repo, we've gone over this a lot in my previous videos, but there's too much money in the banking system right now. There's too much cash. There is a collateral crisis going on right now. But what the banks are doing is, since they have so much cash on their balance sheet, they have to pay interest on that. So it's now a liability to them. So what they do is they send that cash to the Fed, and the Fed gives them treasuries in return. Now, eventually, the Fed is going to wind down this reverse repo program. And what happens then? Well, we've speculated on that on this channel before, that even if the over-leveraged funds are able to basically give the banks more liquidity that they need for the hedge funds to actually maintain these positions, it may not even matter, because the banks do not want that cash. So when you look at all of this data as a whole, it doesn't necessarily matter if the market event actually happens first. And well, what I mean by that is that market sell-off. It doesn't matter if that happens first, or the MOAS, the short squeezes for AMC or GameStop, happen first. Both of them are going to lead to forced liquidations of other positions if you are wildly over-leveraged at the current time. So what I really want to get across to you guys in this video, out to the ape community, is that we are still winning. When we look at the chart for AMC, and we bring this out to a 3-month chart, look at how low we were trading just in the beginning of May. That is not a very long time ago. We were trading at the basically $10 to $14 range at the beginning to the middle of May. We are now sitting at $34.06. Even though we have seen this big sell-off over the last couple of weeks, we are still winning. Now, if you want to buy more shares of AMC, that is your prerogative to do so. I do not believe that anybody else is in charge or can tell you what to do with your money. And again, nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. Now, when you combine the overall market conditions with the potential ramifications and impact of all of the new proposed rule changes that are coming in basically every single week, we are in the driver's seat in this situation. The hedge funds who are over-leveraged have backed themselves into a corner, and I believe that they are trying to find a way to kick the can down the road long enough so that when this situation ends up popping off, they can stay in business. So in my opinion, it is only a matter of time. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.